JSW Energy has stepped up its green initiatives by forming a new company for its renewable energy business. Once the reorganization is complete, all the existing and upcoming renewable energy businesses of the group will be housed under JSW Energy Neo Limited, a wholly owned subsidiary. According to the company, the move will make it easier for it to raise funds. JSW had issued green bonds of $707 million in May. JSW Energy currently has 1,400 megawatts of installed hydro and solar capacity. This figure is to be increased to 17 gigawatts by 2030. Mukesh Ambani and Gautam Adani are pumping in the big bucks, pushing India's scattered renewable energy industry to the next level and hyperfueling the country's clean energy dreams for 2030. The two billionaires' moves are ringing in the next phase in the renewable energy space, with their entry signaling an inflection point for the sector. This is in fact the cover story of the latest issue of the Business Today magazine. And for more on the space, here's a slice of a panel discussion on the renewable energy sector with sector experts.
Let's talk about the two big names that are driving this agenda forward in the private space, both Ambani and Adani. Diving in here, firstly, how would you differentiate between the plans that the two giants have for the space?
I think, first of all, the amount of investment that both have committed, that's quite huge. $30 billion is almost equivalent to the amount of capital that has gone into renewable energy so far. I mean, in the last 5 years, 60 gigawatt of renewable energy has been put in the ground, and that is equivalent to around $30 billion of total investment. And that is, these two players are kind of announcing that. And the second thing that is very, very interesting about them is that they are not only focused on the generation assets, but they want to also go into the supply chain and the technology. I mean, both have announced, plans to do backward integration. Adani already has some manufacturing, and they want to kind of go backward integrated into that. They've also kind of announced their desire to invest into hydrogen electrolyzers. Reliance, on the other hand, has announced partnership with Seastal. They are kind of working on low-cost hydrogen electrolyzer. Ambani has also announced investment in fuel cells, of course, gigafactories around storage and solar panels. So this is the first time we are seeing that investment is not only on the side of generation assets, which has been the main focus of the last 5-6 years, but also in the technology and the supply chain. And the second, the third aspect that comes to that is that this is going to be essential to reduce the cost going forward, because so far the cost has been coming down because of the global investments that have been going in technology. But now, when we are localizing here in India, we would expect the cost down. Where they differentiate a bit is where, at least what we see, is that Reliance has had a lot more global approach towards partnerships and announcements, and the Adani Group has had a lot more focus on regulated assets and building capacity there. And it remains to be seen how that kind of converge or diverge going forward. But this, industry being set up globally at a scale which is envisaged with the localization, that's a huge thing for India and can also give impact to us as a technology hub going forward.